What's up guys, welcome back to the channel. Now in today's lesson we're going to analyze Gbpusd in order to have a bias for the coming week. We trade smart money concepts, and trading smart money concepts you actually need to have a bias, have an expectation. But when you have an expectation in the market, you don't just have to expect blindly, because there are some price actions price might print after your expectations that might propel you to change your expectation or start expecting something different. So let's analyze Gbpusd. Last week we looked at ENROLL, and this week let's look at Gbpusd to know what we're going to expect in this coming week. So if you start from this area, maybe let's start from here. These are around November, but let's look from this particular area. My students who enrolled for mentorship, we've been looking at this particular pair, but let's see what we have right now. So if you look at this particular area, you're going to notice that we have a high and a low. That is if you're looking at this from a higher time frame. This is one leg of price, okay? This is one leg of price. But if you're looking at the internal structures, you're going to see we have a break of structure right here. We have a mitigation. We have a break of structure. Price retraces back, mitigates something here. Break of structures, mitigation, break of structures, and you see mitigations right here. But if you're looking at it from a higher time frame perspective, this is just one leg of price. And if you understand multi-time frame structure, you're going to know that when you see one leg of price, that's actually a trend on the lower time frame. Now when price pulled to the downside, that is pushing to the downside, absorbing the supply levels at this particular area, you see price rapidly expands to the upside. And after the expansion to the upside, if you look from the left, this is a break of structure right here. And after the break of structure, we start seeing price pulling back into this range. Now that is this low we see right here. If you look closely, you're going to notice that this low right here printed this particular high right here. Now this is a pullback, and after the pullback, you see a continuation to the upside that breaks structure. Now this is the low that printed this high. Now seeing this alone, you already understand that you are in an uptrend. Okay, another break of structure to the upside. Now price is clearly in an uptrend. Now what is the expectation? Now that price is pulling back right here, remember this low right here, this low we have right here printed this high. Now that we're having a pullback, what is the expectation? The expectation is we're going to have another push to the upside that is going to break structure, right? Now here is your trading range. If you look closely, this is your range right here, this is your range, this high right here, and this low is your current trading range right now. So this is our range, and if price takes this high, we're still in an uptrend. But if price comes to take a higher low, because in this case this is our higher low and this is our higher high, now if price takes our higher low, it's going to signify a possible shift in structure. But now you see price starts trending inside this range. We've seen price starts trending inside this range for a very long time. Now this is where a lot of people might actually get confused, because someone who doesn't really understand how to read structure might be stuck inside this range, or any other person that trade internal structures, because anyone that trades internal structure might actually be trading maybe from this area, taking trades. At this point they start seeing a shift of this internal structure. It's look to trade from this area. They actually got good trades, but if you actually have zero knowledge about structure, you might actually get stuck in this market. Those who might actually enjoy this price action right here are people who trade support and resistance, because here is going to serve as a very strong resistance level, and here is going to serve as a very strong support level. So any support and resistance trader that catch this price action is going to make a lot of money in the market. But you trading smart money strategy, this is simply a range, and what you have to do is for price to firstly expand out of this range before you start looking for trading opportunities, right? Now continue to read the price action. At this point you see price gathered momentum after being in the range for a very long time. At this point price gathered the momentum. You see after it sweeps liquidity at this highs, takes this external range liquidity. You see how price rapidly expands to the downside, and it was able to take this external range liquidity. That is the sell side liquidity we have right here. Now that price takes this sell side liquidity, what you're going to notice is that firstly we have a very good zone right here. So if you're looking to trade from this zone, congratulations, this is a very nice zone. But always remember that trading is a game of probability, and there is also a probability that this zone might actually fail to hold price, because nothing is certain in the market. Okay, nothing is certain. Now price retraces to the downside, takes external range liquidity, and now we've seen a retracement into this range, and the expectation now is we're going to trade from this zone and a push to the downside. That's if you're actually looking at this from the 2 hours time frame 4 hours or the 1 hour time frame, you're going to see this same price action. Okay, that's if you understand the fractal nature of the market. Now let's jump to the lower time frame and see the price action we actually have on the lower time frame and what you can actually expect if you trade in the lower time frame. Now if you are trading the lower time frame, what you're going to see is that at this point price starts to retrace to the upside, because if you're looking at the lower time frame, you're going to see we have this single candle pullback, and now if price actually takes this particular high we have right here, this is actually a shift in structure if you consider this single candle pullback. That's what I say. Now you see price starts to trend back into this range, and this is actually a corrective return back into this particular range. Now what I can actually see is that we have a very slow price action. I'm seeing ICT's power of 3 right here. That is if you understand the power of 3, that is accumulation, manipulation and distribution. You're going to see this is actually what we have at this particular area. If you look closely, if you mark this area, this is going to serve as an accumulation area where we see price ranging at this particular point. Okay, you see this slow price action at this particular area, no definite move. Price was just slow inside this range. After this slow price action, what do we actually see? Price now expand out of this range. You see, when it was trying to rebalance some of the inefficiencies, because price playing back into this range is trying to rebalance this inefficiency, and you know how inefficiencies are created in the markets. I've actually talked about that. So if you're still struggling with that, I have lessons on pricing efficiency, or you can actually be called imbalance or fair value gap. You can look to watch those lessons. So price manipulates out of the market. So if you try to look, this is actually the accumulation right here. So let's try to label this. I'm going to label the accumulation as A. So this accumulation, when price was slow, this area we have a lot of stop losses in the market. That is a lot of money resting above the high, and we equally have monies resting below the low. That is money resting above the high and below this particular low right here. Now at this point, you see price rapidly expands to the upside, sweeps the money. You see price actually moved far away, making sure that if you have your stop losses placed above this particular high, you are swept out of the market. Now price takes this buy side liquidity, and you see how price rapidly expands to the downside, and this was actually caused by CPI. This is a news event, a very high impact news event that usually have impact in the market once it's been released. Now price manipulates, rapidly expands to the downside. After it takes buy side liquidity, it also drops to the downside to take sell side liquidities. Now after that, we are now seeing a retracement back into this range. Now a lot of people were actually looking to trade from this particular zone. This is also a nice zone, but the way I trade, I wasn't even going to look at this particular zone, but because this is going to serve as my inducement area, or I can actually call it a liquidity area, because this is more like a resistance level. Okay, this is actually a resistant level for me, because we've seen price has been rejecting from this particular area. This is not the first time it's happening. You see price rejected the first time. See the first rejection, price rejects to the downside, retraces, rejects once more to the downside, comes back. You see that rejection, and now finally price sweeps that liquidity above the high. So support and resistance traders must have made money from this also, but those who fail to close their position, that still have their stop losses above this high, you see we have another manipulation, price sweeping them out of the market. Now what is my expectation if I want to trade the lower time frame? I'm going to consider this week right here as the zone I'm going to look to trade from. Okay, this is more like a hidden zone. This is it. We have two zones. This is actually a very powerful zone, this zone we have right here, and we're going to anticipate that price is going to react from this zone. Firstly, why are we anticipating that price is going to react from this zone? After the accumulation, manipulation and this distribution, in some cases we usually see price returning back to that manipulation area to rebalance price before pushing to the downside, because it's known that this push to the upside, this sharp move to the upside was caused by institutions, and it's known that their position is still open, because what they did is they entered a lot of buy orders in the market just to push the price to the upside. And a lot of people were expecting that price is going to move to the upside, mostly breakout traders expecting that price is moving to the upside. And remember, the institution, their buy position is still open, that's why they pushed price rapidly to the downside. Now price coming back to this area is that our expectation is we're going to expect what we call mitigation. That is reduction of risk, and we're going to expect a push to the downside. Now what I'm actually seeing here is that price just mitigated this demand zone right here, this lower time frame demand zone. So this is actually going to fuel price to continue to the upside. Now we have this push to the upside. Now these two things this is another thing you're going to expect in the market. There's actually a possibility that price might actually come back once more to mitigate this lower time frame zone. There is possibility it could actually happen. Price might come back, mitigate this zone, and a continuation to the upside. And this mitigation of this zone is just to fuel price to get this to this particular zone before we look to trade the downside. Okay, this is just an expectation, and if you want to trade this, you have to trade it with caution. Okay, trade with good risk management, because you can actually lose money. Trading is risky if you don't know, or if you just discovered about forex trading comes with risk, and you can actually lose money. Okay, so let's go back to the 2 hours time frame. Let's round up for this lesson. So that's it for today. Okay, it's good zones, good areas you can actually look to trade from. And remember, the price action I analyze right here is for the lower time frame. This is what you're going to see if you're analyzing from the lower time frame, and if you're looking at the higher time frame, this is just your trading range right here. Okay, your expectation is this. Okay, so this is for mostly scalpers, and this is for swing traders and day traders. Okay, so that's it, and I hope this was valuable. If you think this was valuable, consider subscribing to our channel. And we have free Telegram channels where we share trading education and trading setup. So if you're interested in that, link is in description. You can look to join us today. Thanks very much, and see you in the next lesson.